Hello tubers, this is Confused, and today we're going to talk about one of my absolute favorite opportunities that the stock market offers us on a near daily basis. This is how to trade an oversold stock for a reversal. We want to see a lot of volume without any sort of dangerous external catalysts such as news, extreme trading on the SPY, or that random Trump tweet that just sends the market spiraling in both directions in a matter of minutes. Basically, anything that can muck up the patterns that we see on the chart, we want to avoid because uncertainty breeds losses. That said, this trade in particular turned out to be one of those situations where we didn't have any of those problems to worry about. Today, the SPY gapped up about 4 points, and this stock, BYND, more or less stayed about the same price that it was last week before the open today. So what made it interesting was that we had a good bit of volume, and it was all just quick out of the gate to the downside, and it finally bottomed out around one of the support levels that I have marked on the chart from last week. As you can see, we bounced off of 152 and actually went to the next support line that was up here. If we scroll back, these lines are created because of rational places on the chart where there was some manner of support or resistance. And I said, okay, well, here's how I'm going to play this. I've seen a pattern form in between these support and resistance lines. I know the VWAP's right up here. So I know that I have a fairly low risk entry if I take a long once it breaks outside of this pattern. So I got in right about here. And with this sort of play, this is a breakout reversal. I wouldn't consider it a failed trade until either it broke to the bottom of this pattern, or B, there was some kind of catalyst out of nowhere that would scare me out of the trade. But because neither of those happened, stop loss was probably about right here. We went up to the VWAP, it touched it, came back down, and then broke out, and I started selling as soon as we were getting up here. So I had about $1 risk, $1.50 risk, and I started selling my first bid about $1 up, and I was layering out all the way up here. I was out at least 2/3, somewhere up here around 158. I believe I sold the rest of it right as it started setting up on the VWAP looking bearish. So in review, we found a stock that had a lot of interest, a lot of volume, that dumped really hard out of the gate and got a relief bounce right off of an old support level that we expected to hold. Then we saw it put in a higher low and form this nice pattern in between the support and resistance level. We took a long once it broke out of the pattern and held until we saw some sort of explosive price action above our target price, which was defined by the amount of risk we had, which was around $1, $1.50. Once it exploded into that price, we started taking our profits and scaling out as soon as we could. We didn't exit the trade until